All right, welcome back. Crypto 7-Day Profits Accelerator. And here we are, day 7. We finally made it. And I've updated some of the things on the main sheet here since we originally published everything. So this will look slightly different than it did in the first video, but that's okay. Still got the welcome video. I've added a link for if you want to take a look at more information, kind of a program summary of the Crypto Investors Mastermind, the main community that I operate. And there will also be a link to an application form there as well. Let me just quickly show you what this is going to be like. It's just going to say, hey, the patient investor, here's what it is, here's what it isn't, here's what we do, here's how we do it, and then down below a little bit more information just about the community itself. And then there's a few other videos on here. Overview of our strategy. We've already covered that in the 7-Day Accelerator. There's a video tutorial. We've already covered that in the 7-Day Accelerator. And an example of 80% APY on one of the positions that I opened a while ago. And then a few FAQ, frequently asked questions, and then some testimonials and results of people who are already in the mastermind. So if you want to take a look at that, just get more info, the link is right there for you. And here we are, day 7, harvesting your gains. So remember on day 5, we opened up your first liquidity position, and I took you through a quick demo on a platform called Aperture. So what we're going to do today is revisit that same position, take a look at how it's doing, and I'm going to harvest the gains. And then we can talk about, hey, what do you do with the gains that you harvest? What are some of your options? So I'm going to go ahead and launch the app here. And, oh, give me 1 second. Let me switch networks. All right, there we go. Got us back to the Arbitrum network, which is where we opened the position in the first place. I'm going to click on liquidity positions, and that will redirect me to the original liquidity position that we opened up. Now, a couple of things I want to highlight right off the bat. Number one, this little green check mark, in range. That's good. That's very good. It means we are still in range, meaning we will still be collecting trading fee income from this position. Because this is ETH and a stable coin, our range originally we set from 2,700 to 3,300. ETH is still inside of that range, which is good. That means we've been collecting trading fees this whole time. If I click on this position, I can open up a few more options here. Now, the first one I'm going to highlight here, because this is one way to compound your gains, there's a little button here called reinvest. I could click that, and it would take my $1.22 and it would reinvest it right back into the original liquidity pair, and then my liquidity pair would then be worth more and be able to then produce more as well. So the metaphor here is if I have 100 acres of land and I grow potatoes, and then I sell the potatoes, but then I buy more land with the money that I earned from selling the potatoes. Now instead of 100 acres, I have 102 acres. Then the 102 acres can produce a little more potato. Then the next time I can have 105 acres, and so on and so forth. That's the compounding effect in action here. But first, before we get to harvesting, which will be collect fees, this button right here, let me show you another really handy tool called Revert, revert.finance. This is a way that you can evaluate how well your positions are performing. So you can see we've got the ETH USDC position right here, and it's letting us know this is the number I'm most concerned about, because the value of ETH will constantly fluctuate, and that's okay, we expect that, but it's the fee APR that produces that consistent cash flow for me. And right now, currently, I'm getting a 57.63% APR on this pair. Now, a couple of things to observe. Number one, that is in our target range of 50 to 100%. And you might go, oh, but it's only 57. Like, that's not that good. But consider also that we're farming with ETH and a stable coin, like blue chip assets, right? You would expect this to be reasonable. And 57% for a pair like that is actually really, really good. And also consider the current market situation that we're in right now, which is there's not a ton of trading volume, and it's going to start warming up and ramping up here in the very near future, meaning it's May 15th, 24 right now. In all likelihood, is typical of a bull run, that as things start heating up, there's more trading happening. So the trade volume market wide increases, which means especially around a pair like ETH and USDC, the trade volume will increase, meaning that in all likelihood, this is just a demo position, but if it was a real position, I left it open for another few months, in all likelihood, this fee APR would actually go up a little bit. And I would expect, even during like high volume times, I'm probably going to get maybe 60, 70%, somewhere in there, with this kind of a blue chip pair and the reasonable range that I chose. Now, this was just a different position I opened a while back with Fetch AI, FET, and Wrapped BNB. And I did that, on the BNB network. And that one happens to be getting 88% APR. And again, two really great blue chip assets, and I'm getting an extra 88% on top of whatever appreciation these two assets enjoy over the course of the next 12 to 18 months over the course of the bull run. So this is just to highlight, hey, you don't know exactly where the APRs are going to be. I thought this one was going to be like 60, but hey, it's 57. No big deal. Like I was a few percent off. But then this one is 88%. Sometimes I open up a position and I come back in here and they're 110%. I don't like to promote things over 100% because I don't want to set the expectation that like that's how it always is. But yeah, here and there, you're going to hit over 100%. And the APRs fluctuate as well because the APR is based on the trading volume, meaning if there's a really high trading day, I might get a crazy return in one day, and then the rest of the day it's less. Or the rest of the week, the individual days are less. But then over the course of the year, it will average out to that range that we talk about, right? The 50 to 100% range. That's the target range. Sometimes you might fall below that, like if you're going to do Bitcoin and ETH and pick a really wide range, yeah, you might land in like a 30, 35%. But you're farming Bitcoin and ETH. Like those are really safe assets to hold. And remember, you're adding an additional 30, 35% on top of that. But for the most part, all things considered, if you have like even a reasonably diversified portfolio, your total APR across all of your pairs in your entire portfolio will likely fall between 50 and 100%. Again, if you're picking the right assets, if you're choosing the right ranges, and if you're monitoring these things to make sure that you're not falling out of range too frequently. Because when you fall out of range, you stop collecting those trading fees that are generated from when you are in range. Okay, that's the principle of concentrated liquidity. We're not providing liquidity for an infinite range. We're just providing liquidity for a chunk of where the trade volume happens. Okay, so that's revert. And again, this is it's just one tool, right? It's one tool that can be a portfolio manager. It's one tool where you can evaluate the stats that you're collecting to monitor your positions. It's not the only tool that does this, but again, remember, principles, strategy, tactics, tools. All the way at the bottom is tools. Yes, they're necessary. You need them, but at the end of the day, we don't ever need to be married to one tool, okay? So, like I said, it's May 15th, 24. 6 months from now, there might be 3 more other tools that are equal to or greater than revert. I don't know yet. Maybe they're being built right now. The point is we don't want to land on like, I have to use Aperture all the time. I have to use revert all the time, okay? Remember the session on scams, that's what they tell you. The scam says, no, we have the one proprietary platform / tool, and you must always use our platform, and our platform is the only good one out there, and everything else is garbage. That's not the way the real world works, especially in decentralized finance. There's dozens, hundreds of tools out there, and part of being in a mastermind community, yes, education, yes, training and support around how to do this, but then as we move forward, as things continually evolve, we're always looking at whatever is most timely and relevant in the market that week, and it's DeFi. Like the market is constantly evolving all the time. All right, back to our liquidity position. We've got our $1.22 in fees, and again, you go $1.22, Brandon, give me a break. Like that's 1.3% or whatever of that. And I go, yeah, because we just opened this position a couple days ago. It's not going to be a ton yet, but it does represent an estimated APR of 57%. So you got to keep in mind when you come back to harvest, if you haven't put much in, maybe it's a couple bucks, but it's not about the amount, it's about the percentage. And yeah, if I had put in 9,600, then this would be $100. And I'd be like, sweet, I'll take that. So the one way to compound would be clicking on the reinvest button and going through that process there. I'm not going to do that, but just know that that is an option. The other way to reinvest is to click on collect fees, and it's going to tell me, okay, Here's the total dollar value of these assets today. Here's what they represent. 0.00020505 of ETH and 0.603 of USDC. Okay. Now, if I were doing this for real, I would pull out a note card and I would write down those two numbers, because what I want to do is harvest the income and then shift it over to a separate wallet where I'm building another portfolio that I'm preparing for the bull run. So I would just collect these. It's going to pop up in my MetaMask. I'm going to say confirm. And now this unclaimed fees is back to 0. So then what I would do next is I would, I have the ETH and the USDC in my wallet, right? And let's say I was trying to accumulate as much ETH as possible. Let's just make the example simple here. I'd go to swap. I would say, you know what? I just collected 0.603 of USDC. I actually want to trade that for ETH because I love ETH with a passion. I'll click on max, which is going to be my 60 cents, and then I would swap this. I'm not going to do it because it's silly. It's 60 cents. But I would click swap, go through the process, confirm in my wallet and everything. And then I would have approximately $1.22 worth of ETH because I swapped the USDC. When you initially harvest, it's in the form of whatever you're pairing. So if you're pairing ETH USDC, your harvest is in the form of ETH USDC, then you can swap those for whatever you want. If I were to harvest my FET BNB pair, it would be distributed to me in the form of FET and BNB. Great. So I could take that $1.22 worth of ETH that I've now swapped for, stuff it in a separate wallet account, which is easy to create, and then I have, hey, this wallet is just my pure profit. How is that compounding? Well, that ETH over the course of the bull run could multiply. In all likelihood, it will. So let's just pretend it doubles in value, okay? It's probably going to do more than that, but let's pretend it doubles in value to, something around 6,000. That $1.22 that I just harvested at a later stage will now be worth $2.40. So effectively, this 57% APR became 114% APR because the yield that I earned, which is what comes out of this fee APR, the yield that I earned now doubled. Now, again, just illustration numbers to keep the math easy. I don't know what ETH is going to do. Will it do a 1.7x? Will it do a 3.2x over the course of the bull run? I don't know. And partially it depends too on when you would sell it to realize and lock in that profit. All I wanted to highlight here today was you get into here, you open up your position, you can check revert to know how it's doing. If it's underperforming, you might just remove liquidity outright and start over. So I could just click remove liquidity, it'd break the pair apart, I'd have the assets right back in my wallet, and I could create a new pair, maybe pick a different range, or just swap for different assets and create a pair with different assets. But in this case, it was in range, it looked good, and so I clicked on collect fees and now it went to my wallet. And again, I can keep that USDC and ETH if I want to, or I can swap it for just ETH. Or if I just love Bitcoin with a passion and my goal is to acquire as much Bitcoin as possible, and I want to just keep collecting it for the next 20 years, then I might swap that $1.22 worth of USDC and ETH. I might swap that for Bitcoin. Well, in this case, it would be wrapped Bitcoin because I'm on the Arbitrum network. I could swap that for wrapped Bitcoin and just stuff that in a separate wallet and just accumulate. Okay, there's a number of different tactics that you can employ here. And my goal is not to go through all of them with you, but rather to say, hey, here's one really nice path and it works. Is it a total comprehensive strategy? Well, it can be part of a bigger strategy, but it would be outside the scope of just 7 little videos to go through everything. I'm just trying to show you here's one possibility and here's the reality of it. You get this APR and we just received it. It's now in my wallet. That's $1.22 that I did not have before. And when we opened this position, I forget exactly what it was. It was $1.18 less. So the value of the liquidity has also gone up by $1.18. So I could say, hey, this used to be 95.04 or whatever. Now it's 96. Plus I have that $1.22. That's just the trading fee income. So I can leave this liquidity here, let it work its magic, and I'm going to harvest my fees and then use those to build a bull run portfolio, which I can then sell when I think that we're near-ish the peak of the bull run, okay? So that's it. That's the whole process. If you feel like, you want to review, obviously go back, take a look at some of these other videos. maybe how yield farming works if you're still unclear on the process. Go back over the strategic approach. That's super, super important. And I mean, obviously, all this stuff is great. You can rewatch the whole series if you want to. But after that, go ahead and click on the info page. Take a look at the mastermind. I mean, at the very least, just explore the possibility of like, hey, maybe I should just go ahead and apply, see what happens. We'll jump on a call with you. We'll just chat for a little bit, kind of see, hey, where are you at right now? Is it a possibility that we might be able to help you? Here's how we might be able to help you. Here's what the mastermind would look like for you in your specific situation. And we can kind of help you talk through, a big picture goal and what it would look like with, again, like your individual situation. If you started with your starting capital, whatever that is, 10,000, 20,000, 50,000, 500,000, I don't know. But if you started there and then we projected forward 4, 6, 8, 12 years, whatever that number is for you, we can create an illustration specifically for you for, hey, what's a reasonable expectation if I actually execute this strategy, put it into action, and if I'm consistent with it. And just to be completely transparent and honest with everyone here, like that's actually the number one thing that'll hold you back. If you kind of like dabble in this for 3 months and then you throw in the towel and you just go like, never mind, it's not fast enough or it's not working or what have you. And I've had people do that, unfortunately. They've said, hey, I did it for 6 months. Thanks for the memories. I'm out of here. But they made money, which is the hilarious part. You would think that if you're doing something consistently and it's making you money, remember, closer, not more, it doesn't have to be hyperspeed. It can just be, wow, I'm significantly outperforming any other asset class by participating in decentralized finance. And I'm getting closer and closer every single day to more of what I want. And that'll be unique and individual for each person. So go ahead and click that link, take a look at the mastermind information. And then as always, if you have questions, drop them in the group, tag me. I'm always responsive. I'll always help wherever and whenever I can. And then ultimately, if you want to take the conversation to the next level, it'll either be myself or someone from the team that will jump on the call with you on a Zoom call and just kind of talk you through, here's how it would work in your unique situation, okay? That's it. Hope you've enjoyed the 7-day crypto profit accelerator. I hope you've learned something, and I hope that you will take this knowledge and at the very least, just avoid scams. If all you get out of this is avoiding scams, you're winning. Trust me, because I've seen people losing multiple 5 and even 6 figures just from scams. Okay, so if all you do is avoid losing your ass to a scammer, I'm happy. I feel like I've helped someone accomplish something. So yeah, drop the questions in the group. Thanks everyone. I hope you've enjoyed the process here, and I'll catch you on the next accelerator.